All right, let's talk about trading charts. Today, we're jumping straight into the Candlestick Trading Bible to really get a handle on one of the most powerful tools out there, Japanese candlestick charts. Let's get right to it.
If you've ever pulled up a financial chart and just felt completely overwhelmed, like you're trying to crack some kind of secret code, trust me, you are not alone. It can seriously feel like a wall of impossible to read alien language. But here's the thing. What if I told you it's not a secret code at all? It's actually a language. And like any language, once you learn just a few of the basics, you can start to understand exactly what the market is trying to tell you. So that's our first mission, to crack that code. We need to shift our thinking and realize these charts aren't just a bunch of random lines and boxes. They're actually telling a story that's unfolding in real time. And this really is the key. This isn't about just memorizing a ton of complicated patterns. No, it's about becoming fluent in the language of finance. It's a skill that lets you understand what's happening in the market on a much, much deeper level.
And this is the most crucial part to grasp. Every single one of those little candles you see, it's a snapshot of a battle. It's a literal tug of war between the buyers, the bulls, who want prices to go up, and the sellers, the bears, who want them to go down. It's all about human emotion, fear and greed, made visual.
Okay, so if we're going to learn this new language, we have to start with the alphabet, right? So let's break down the anatomy of a single candlestick. I promise, once you get this, everything else will start to click into place. First up, we've got the real body. That's the thick, chunky part of the candle. Now, if you see a long body, that tells you one side was clearly in control. It's like a shout, not a whisper. It shows you there was really strong momentum in one direction. Next, you've got the shadows, or as a lot of people call them, the wicks. These are the thin lines sticking out from the top and bottom. They show you all the drama of the session, the absolute highest and lowest points the price hit before it settled. Long wicks mean there was a serious fight going on.
And finally, maybe the simplest part of all, the color. If the price closes higher than where it started, the candle is bullish, usually green or white. It means the buyers won that round. If it closes lower, it's bearish, red or black. The sellers took control. That's the fundamental story every single candle tells you.
Okay, so we've got the alphabet down. Now let's start putting those letters together to form actual words and even sentences. We're going to look at 3 really common patterns and the powerful stories they tell about that market battle. Our first story is all about a dramatic shift in power, a complete and total takeover. It's called the engulfing bar, and when you see it, it's a huge signal that the dynamic in the market has just changed. So, what does it look like? It's actually pretty simple, but don't let that fool you. You'll see a small candle, maybe from a pretty quiet trading session, and then bam, it's followed by this massive candle that completely swallows or engulfs the one before it. The psychology behind this is so powerful. Just imagine a small group of soldiers making a tiny bit of progress, only to be completely overwhelmed and thrown back by a much, much bigger force. That's what's happening here. It often means the old trend is running out of steam and a new one is about to begin. All right, story number 2. This one is a story of rejection. It's about one side trying with all its might to push the price down and just getting slammed right back. We call this pattern the hammer.
And, well, it pretty much looks like a hammer. You'll see that small body sitting right at the top, and then this really long lower wick or shadow. That specific shape is what tells us this incredible story of rejection. So here's the play-by-play of what happened. The sellers tried to tank the price. They pushed it way, way down. But then, out of nowhere, the buyers stormed in with incredible force. They said no way, rejected that low price, and drove it all the way back up. It's a huge sign of a strong price floor and a potential reversal to the upside. And for our final story, we have one of perfect balance, or maybe you could call it a total standoff. This is the doji, and it's a flashing light for pure indecision in the market. A doji pretty much looks like a cross or a plus sign. Why? Because the opening and closing prices for that period are almost identical. It means the buyers and sellers fought each other all session long, but in the end, it was a draw. Neither side could win. Just think of it like a pause. The market is just taking a breath, trying to figure out where to go next. Especially after a really strong trend, seeing a doji is a powerful warning that momentum might be fading. It doesn't guarantee a reversal, but it definitely puts the old trend in doubt. Now, being able to spot these patterns is fantastic, but it's really only half the battle. See, a pattern by itself is just a word. To understand the whole sentence, you need grammar. And in trading, that grammar is called context. And here's a really powerful way to use that context. It's a simple three-step framework. First, you identify the overall trend. Is the market generally moving up, or is it moving down? Second, you find a key price level, a support floor where the price tends to bounce up from, or a resistance ceiling where it often turns back down. And third, that's when you look for one of our candlestick signals, right at that key level. Believe me, a hammer pattern at a major support level is a way stronger signal than one just floating in the middle of nowhere.
So there we have it. We've learned the alphabet, a few keywords, and some of the basic grammar. You now have the fundamental tools to start reading the market stories all on your own.
So what are the big takeaways here? Just remember this. Candlesticks make market psychology visible. Those simple patterns tell really powerful stories about the ongoing battle, but it's the context, the trend, and those key levels that give those stories real meaning. And maybe most importantly, your goal here isn't to predict the future with 100% certainty. It's to understand the probabilities. Look, we've really only just scratched the surface today, but you now have the foundation to look at a chart and see so much more than just a secret code. You can start to see the stories playing out. So the only question left is, what stories will you find?